Hello, welcome to the European Open briefing for Monday, April the 3rd. I'm Rafi Boyadjian, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So we had a fairly positive start to the second quarter, at least in Asia. Stock market in Asia were up, and in Europe, most major bourses were also got off to a positive start. We had some good data out of China and Japan, which added to the positive risk sentiment. There's a few risks ahead, though. We've got a first meeting between the US president and the Chinese presidents later this week, where they will likely discuss trade policies as well as North Korea. So there is a bit of anxiety on how those talks will conclude. In Europe, the euro and the pound are fairly mixed, though against the dollar, the pound is not doing too badly, while the euro is still facing some downside pressure. We had some data out of Australia as well this morning. The main one, of course, was retail sales, which was disappointing, and so we saw the Australian dollar slipping against the US dollar after the release of that data. While in commodities, oil is not doing too badly; it's doing much better than it had been recently. It's currently trading near 4-week highs on the back of the signs that OPEC and non-OPEC countries will possibly agree to extend the current oil output deal. But let's start with the dollar-yen pair now. We can see that the dollar, although it did rise towards on the end of last week, on Thursday, early on Friday, that was mainly due to end of month flows, but then we saw the dollar retreat a little bit. We had the Fed speakers coming out on Friday, mainly New York Fed President Dudley. He pretty much confirmed that there will probably be 2 rate hikes this year, although other Fed speakers, Bullard and Kashkari, they were more dovish, and that slightly hurt sentiment for the US dollar, although it's currently recovered a little bit. It's trading near 111.50 against the yen. But coming up, we've got important data this week. We've got the ISM manufacturing and non-manufacturing PMIs, as well as non-farm payrolls, all of which are important indicators about the health of the US economy, and they could point to potential increase in rates in June by the Fed. But as mentioned, we also have some political developments. President Trump will meet China's President Xi on April 6 and 7, and that's going to be an important one, given that the US has repeatedly, or at least Trump has repeatedly raised the threat of imposing tariffs on Chinese products. But let's have a look now at that data we had out this morning, Chinese manufacturing PMI. It was slightly off estimates, but it was, and also down from last week, although it was in fairly positive territory at 51.2, and it shows the manufacturing sector continues to recover. We had, out of Australia, we had building approvals, which was sharply above expectations, though retail sales was disappointing. We will look at that data in a bit more detail shortly, but the main focus was the Tankan survey, for Bank of Japan's quarterly Tankan survey, which most of the indicators they rose in this first quarter compared to the prior quarter, and this was the second consecutive quarter of improvement, although the numbers were slightly below expectations. The capex spending levels for big manufacturers, that beat estimates, though. Japanese big companies expect to raise capital expenditure by 0.6% in the current quarter. Estimates were for a slight drop of minus 0.1%. So overall, the Tankan survey was positive, and it shows that Japanese economy continues to improve, as well as the global economy as well. There seems to be signs of growing demand globally. And with exporters across Asia doing better than in recent months at least. Moving to the Australian dollar now, we can see the Aussie has been drifting lower this morning. It's currently it briefly dipped below 0.76, currently just above that level. Retail sales disappointed by contracting by 0.1% in February instead of growing by 0.3% as expected. Housing data was more positive, but in another development, we had the Australian Prudential Regulation Authority tighten lending rules on Friday in order to keep a lid on house prices. So far, that's had previous measures have had limited impact in controlling house prices and to prevent a surge in household debt levels. That's the main reason why the RBA is not raising, it's not cutting rates rather, so as not to fuel the debt levels further. The RBA will meet again tomorrow. They're expected to hold rates at 1.5%. Although it'll be interesting to see what they will signal in their monetary policy statement, whether or not they will shift the neutral bias to a dovish one or even a hawkish one. So that could determine what will happen to the Aussie tomorrow. Quick look at European currencies now. The pound is doing surprisingly well. It's climbed back above the 1.25 level, even though there's already seems to be some tension between the UK and the EU on the terms of the Brexit negotiations. The EU has already published a draft set of negotiating terms. The EU will hold a summit later this month to discuss in further detail on how to proceed. But perhaps the reason why the pound is doing well, maybe the markets were expecting even more tensions between the two sides. So maybe there is some relief that overall the Brexit negotiations are perhaps going more smoothly than could have been expected. The euro, on the other hand, is struggling. We had weaker than expected inflation data last week, which significantly dampened expectations of a move by the European Central Bank to tighten policy sooner than expected. The euro is trading at around 1.0660 at the moment. And finally, in oil prices, we can see that oil prices, at least US crude, has been steadily climbing upwards since the end of last week. It's back above $50 a barrel. Brent crude is above $53 a barrel. There seems to be growing support within OPEC and as well as some non-OPEC countries to extend the current agreement to beyond June, as the current agreement has had only very limited impact in balancing the big oversupply in the oil market. Although gains are being held back by the fact that there seems to be continued rise in US production, the latest Baker Hughes active rig count showed another increase in US rigs in Friday's figures. Having a look at today's economic calendar, Chinese markets are closed for a public holiday. We've got Fed speakers, Dudley will speak again, as well as Patrick Harker is due to make an appearance as well. We're going to, in the European session, we're going to have the market manufacturing PMI out of the UK, as well as the final Eurozone manufacturing PMIs. We're going to have Eurozone producer prices and the annual employment rate. And in the US, the big data will be, of course, the ISM manufacturing PMI. That's it from me. Thank you very much for watching and have a great day.